Hello everyone, good morning and welcome to today's morning report on Tuesday the 9th of December with me, Richard Perry, market analyst at Handtech Markets. The European trading session continues this downside move that we saw yesterday. The move on Wall Street overnight was actually fairly corrective. It was actually down on the S&P 0.7%, which was the biggest decline since October. And that has sort of come on the back of this continued weakness in the oil price, and it looks like the energy sectors are increasingly getting hit by this decline in the oil price, and it is weighing on stock market sentiment now. So that correction on Wall Street drifted into the Asian trading session, down across the board pretty much on the Asian markets. Interestingly, although there was a sharp turnaround, initially the Chinese stocks were strongly higher again, but that actually they ended up around about 5% down on the day after reports that the Chinese central bank, the Chinese government are expected to potentially cut their forecast growth for the year down to 7%. Which is a big move, certainly hit sentiment there, and it's carried on into the European trading session. Certainly the FTSE, for example, hit badly in terms of the resources sectors. Energy and mining certainly hit, especially on the back of that Chinese data as well. So that's what we're seeing. Also a profit warning for Tesco's, another profit warning, a fourth one in total. Tesco's shares down 14% at one stage, so very strong downside. A lot of bearishness out there at the moment, and I say that at the moment. It's we're into the second day of this decline now. What we've also seen is a bit of a dollar correction actually today, interestingly I would say, because the dollar has been very strong until recently, but this dollar correction that we've seen has just brought it back on the dollar index, back to this breakout level of 88.7 on that dollar index. So this correction, I'm not expecting it to go too far, and I think there's going to throw up several opportunities to trade this. So I'd be watching out for some of the positions that I talk about in the morning report charts. Euro dollar cable and dollar yen, I think, have all got potential trading positions that we could take from this correction in the dollar. So I will talk about that in a bit, but there's not a great deal of data out today. We've just had the UK manufacturing production, my mistake, that came out at 9:30. That missed expectations, and that was down 0.7% for the month of October, against expectation of being 0.2% higher. So that was actually the biggest fall since May, and it's certainly taken a few points off this cable rally that we've had today. But much beyond that, there's not a great deal today, so it could be in for a fairly well set for a negative trading session. That takes me on to my dollar CAD chart of the day. Dollar CAD has been very strong. It's been in this big uptrend channel, consistently finding support at high levels. This 55-day moving average, which you can't quite see because it's actually underneath this uptrend, so I'll move it. 55-day moving average has been flanking this move higher on the downside, but we've broken out yesterday. We broke out to a new high, or new multi-year high, dating back to July 2009, above that 1 spot 1466 level. We've just turned lower slightly from that 115 reaction high, and that's happened today, as this dollar has just slightly corrected against some of these forex majors. But I think this is going to be an opportunity to buy. I'd be looking out for the next level to come in at on dollar CAD. You'd probably be looking out for this reaction that we've got with these breakout highs and then the reaction low there. So that comes in not a million miles away from that uptrend that's formed over the past few days, and that comes in around about the low 1 spot 14 area. We've had at the moment a pull back towards the breakout level already, forming support around that 114.60. But I think anything between a buy signal between 114.20 and 114.60, I would say that's looking fairly decent as a buying opportunity on this chart. That's for a near-term trade. I mean, if you're looking out for a medium-term levels, you'd obviously want to be buying at this uptrend. That uptrend today comes in at 112.80, so it's a fairly significant way down. But look at these momentum indicators across the board, very strong on the RSI, forming support consistently in the mid-40s and then pushing up towards 70. That is very, very good definition of an uptrend channel, I would say. And also the MACD lines consistently forming support above neutral. Stochastics a little bit extended, so maybe there is room for a bit of a correction to the downside near term, but I would certainly be looking to use any sort of correction as a buying opportunity. There are several bounds of support within this trend channel, but what you need to be doing is, I think, initially looking out for this uptrend that, as I said, comes in around about that comes in around 114.10. So I think anywhere around that 114.20 mark, maybe even higher if you get a little bit jittery and the market looks to be moving dollar bullish again. But I think that would be an ideal entry point near term 114.20. But it certainly looks like this is a very strong chart once again on dollar CAD. Okay, so I wish you good luck in your trading today, and I will speak to you later. Thank you.